Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, December 9th. It's not much for news here tonight. The most dominating feature to tonight's trade, or at least to start the week's trade out early, is going to be Friday's price performance. The market suffered some liquidation pressures, and as I talked about in Friday morning's commentaries, we were due for some sort of a correction in beans, and corn market hadn't performed well the last couple of days, and some of the week longs were due to be liquidated. Markets had a very weak performance Friday, and I think that sets the tone here to begin with tonight to start the week. However, beyond that, I'm not sure that this is a type of weakness that begets more weakness. As far as weather is concerned, South American weather, I think that's going to be labeled as largely favorable or acceptable. In the case of Argentina, it's going to be seen as improving, drying out a little bit, allowing some planting progress to take place. The U.S. plain still has limited moisture in its 2-week outlook, no real change there. But once again, the dominant theme here tonight and to start the week will be the technical price action on Friday. I think that we need to step back and realize where we're at and determine whether this weakness is the beginning of a new down leg or whether it's defining of a major bottom that we process that we thought we've been in place here for the last month. And I think that's what's really in the works. It's probably easier to build a bearish case for beans based on a large South American production outlook, and I think that at the present time that's the type of outlook one needs to have. We've got large acres. We've also got generally favorable weather. To the extent that Argentina's weather is a concern, the impact on beans is going to lead to increased acreage, and not less acreage, and too much rain is a difficult case to build when you're looking at South American production. The problem is this is only December 9th. We've got a lot of the growing season ahead, and regardless of what we may think we have for production right now, to maintain that favorable outlook for the rest of the growing season based on history is probably difficult. So I think you need to look at the market from more of a perspective that we're going to get a short-term correction. Maybe it's most logical to expect that correction to take place in the beans. In the case of wheat and corn, wheat's been languishing here for a week. It's been at the lower end of trading ranges for the last couple of weeks. And I think from a bigger picture perspective, we've got tightening global supply carry-out levels. We've got crop concerns in the U.S. We've got a generally tightening global stocks outlook in wheat, and it's going to be difficult to build downside momentum here in the wheat market. The global cash wheat markets are firm, been moving actually opposite of the U.S. futures market. And we saw last week where U.S. wheat values became competitive globally, and we started to do some export business. So to think that U.S. futures are going to embark on some sort of a independent trending lower price action from here is probably not very logical. As far as corn is concerned, the market has been tired, has been disappointed, and that disappointment certainly was fueled with Friday's price action. That's going to help start things out lower here to begin the week. We have a USDA report out on Tuesday. No significant surprises are expected. There'll be no changes in production outlook. It'll just be a reflection on supply and demand. I think the bearish implications that could come out on Tuesday have been fully digested, and I think the market is more in a demoralization and discouragement type of phase, especially at this time of the year when people are focused on closing the books on 2012 and waiting for 2013. The problem with some sort of a disappointing or dismal outlook for the rest of the month is that we're already about 30 cents off of our high that we saw a couple of weeks ago. We're down within 20 cents of our major seasonal bottom that was established about a month ago. And I don't think you've got the market that's carrying any burdensome long. You had some weak longs that were building last week that probably got liquidated mostly here on Friday as looking to go home even before the weekend. And I don't think you've got new sellers here, and I don't think you got much interest in building new short positions. Cash corn markets are strong, the supplies are tight. The only bearish aspect of the corn market you have is poor export outlook, and that's been the case for 60 days, if not 90 days or more. So I'm not sure that's a new news item. So I think you're looking at a situation where we're going to start the week a little weaker, expect wheat and corn to be very well supported. More of a question mark on beans about how well they will be supported. But then again, you got to look at beans from the standpoint over the last 3 weeks. They rallied about $1.20, and they much outperformed popular expectations. And with a little bit of weakness tonight, we're basically 30 cents off of last week's high. So could we break another 10 or 20 cents? I wouldn't rule it out. But from a bigger picture perspective, we're at a time frame where we should be looking for buying opportunities and expect seasonal bottoms to hold and look at the market as having limited downside potential. For the DPP Grain Desk, this has been Duane Lowry.